Welcome to NTD Business. I'm Don Ma. Just a quick overview of what's happening in markets. Another drop for stocks on Friday has Wall Street on track to close out its first losing week in the last 6, pulling back further from last week when it reached its highest level in more than a year. Critics have also said the U.S. stock market was due for a breather after it climbed too far, too fast, following a rally of more than 20% since mid-October. Much of the exuberance was because the U.S. economy had managed to avoid a recession. The job market in particular has remained remarkably solid. Crude oil prices sank on worries that a global economy under threat of a recession will burn less fuel. High interest rates in the United States have already dragged manufacturing and other industries into contraction. Tech companies were also hit hard. Higher interest rates hurt all kinds of investments, from stocks to bonds to crypto. But high growth stocks tend to be among the most impacted. A 1.2% drop for Microsoft and 3.8% fall for Tesla were among the heaviest weights in the S&P 500. In the bond market, yields dropped as investors look for safer places to park cash amid worries about the economy. The yield on the 10-year Treasury fell to 3.73% from 3.79% late Thursday. Meanwhile, U.S. business activity fell to a 3-month low in June. Services growth eased for the first time this year, and the contraction in the manufacturing sector deepened. This is according to a closely watched survey out Friday. S&P Global said its flash U.S. Composite PMI Output Index, which tracks the manufacturing and services sector, fell to a reading of 53.0 this month. This is the lowest since March. Nonetheless, it was the 5th straight month that the PMI remained above 50. Indicating growth in the private sector. Chief business economist at S&P Global Market Intelligence says that, quote, the overall rate of expansion of business activity in the U.S. remained robust in June. The Atlanta Fed's GDP Now model currently puts second quarter GDP at an annualized rate of 1.9%. The economy grew at a 1.3% rate in the first quarter. And Florida will soon block banks from denying services based on political opinions or religious beliefs. The new law takes effect on July 1st and affects all financial institutions. This comes amid a number of cases of politically motivated debanking from financial institutions. Recently, Florida Attorney General Ashley Moody accused one of the largest financial services companies in the U.S., Fidelity, charitable, of sometimes refusing to facilitate donations to religious or conservative groups. In a letter, Moody demands that Fidelity complies with the new state law that takes effect next month. One of the groups that Fidelity has put up barriers for donations to is Alliance Defending Freedom. And here to talk to me about what happened is Alliance Defending Freedom Senior Vice President of Corporate Affairs, Jeremy Tedesco. So it appears that Fidelity Charitable is creating some barriers for donations to your organization. What exactly happened? Can you give us the details?
Yeah, and it's not just our organization, Alliance Defending Freedom, but it's other conservative and religious organizations. Fidelity Charitable is telling donors who have accounts with them that there's a political litmus test on giving for all intents and purposes. If you want to give to ADF or a handful of other conservative or religious charities that are on the Southern Poverty Law Center's hate group list, you have to give up your anonymity in order to give to those groups, or if you're not, then you're just barred from giving to them. And that is a violation of Fidelity Charitable's promise to the donors that they are cause neutral and that they won't take the religious or political or philosophical beliefs of the organization you want to give to in account when they're deciding whether to approve a grant or not.
And basically, this is making it harder for donors to donate to certain organizations.
Yeah, absolutely. And I think the real big news here is that the Attorney General of Florida sent a letter to Fidelity Charitable telling them, look, not only is this a problem from a misrepresentation standpoint, but on July 1, we have a law that's going into effect that says financial institutions can't discriminate against customers on the basis of their political or religious beliefs. And so she's asking them to confirm that by July 1, they will stop barring donors or requiring donors to give up their anonymity in order to give to charities like ADF.
Did Fidelity, create this barrier on the basis of discrimination to your organization, do you feel?
Well, look, the organizations that they target are organizations that are the target of activist organizations like Southern Poverty Law Center and a group called Unmasking Fidelity, who, and this is something your viewers really need to understand. These activist organizations are putting intense pressure on Fidelity Charitable and other donor-advised funds because they want to stop money from flowing to organizations they disagree with. So the Southern Poverty Law Center has their completely discredited hate group list, and it looks like what Fidelity Charitable is doing is superimposing the hate group list on top of the giving choices that their donors have. And so if a group happens to end up on the hate group list, then the Fidelity says, well, you have to give up your anonymity to give to them. That is a political litmus test. And so that's a really problematic practice, considering their promise to their donors that they're cause neutral in the choices that they give their donors from a giving perspective.
I mean, is this part of a wider problem, or is this something just isolated with Fidelity?
No, this is debanking. This is denial of financial services. This is the strategy of left-wing organizations to try to debank and harm organizations and ideas they disagree with. It doesn't happen just with DAFs, it happens with banks. I mean, there's pressure on banks and other financial institutions all the time to deny services and products to people who the left thinks are engaging in unpopular speech or involved in unpopular industries like oil and gas. So this is the program of the left, to try to get corporations to politicize their services and harm their political opponents. From our perspective, our view is politicized business is bad for everybody. I mean, right now it's aimed at conservative and religious institutions, but the reality is those censorship wheels can churn in any direction, including back on the left, who's proposing them right now. And so we're for viewpoint neutral business practices. We're for financial institutions not canceling or denying anybody service because of their religious political beliefs. And so we think Fidelity Charitable should live up to that, live up to their own promises that that's how they run their program, but they're not doing that.
How do we know that this is, I'll use the word discrimination on Fidelity's part?
Well, because of the way that it's targeted at conservative and religious groups. If you look at a Newsweek article I put out a few months ago, we've had donors now who have put in test donations through Fidelity Charitable. And what they do is they send donations to left-leaning groups that work in our issue areas, and those donations go through easy. It's just a complete pass-through. But organizations on the right, especially organizations on the right who are on the SPLC hate group list, they immediately get hung up in the process, and the donor inevitably is told, you have to give up your anonymity to give. We have over 15 donors in over 12 states who have been told by Fidelity Charitable that they have to give up their anonymity to give to us. And so it's obviously something that's going on as a policy at Fidelity Charitable, and they need to stop it.
Will the new Florida state law that takes effect on July 1st, will that help?
Yeah, absolutely. Ashley Moody, the Attorney General there, clearly thinks that what Fidelity Charitable is doing is discrimination on the basis of political and religious views. And so I think Fidelity Charitable is going to have to make some decisions between now and July 1st on whether they're going to comply with Florida law or not.
So if this is a wider problem, I mean, that law in Florida, I mean, will that be able to tackle the whole issue?
Well, any donor-advised fund that is operates in Florida, and there's quite a few national donor-advised funds, are going to have to take that law into account. And so what they're going to have to decide is whether they want to listen to these external activists who are demanding that they impose litmus tests, political litmus tests, on their donors' giving, or they just want to treat all donors equally and allow them to give to the cause and charity they believe in. That's the way these donor-advised funds should work. They should allow these donors to give to the charity that they believe in, the one that wakes them up in the morning and makes them excited about giving to. They shouldn't be imposing these kind of litmus tests on where people can give.
So speaking of this apparent wider problem, what examples do we have that shows this is in fact a wider problem?
Well, there are broad-based public advocacy campaigns aimed at donor-advised funds in the giving community to try to convince them to impose these kind of political litmus tests on giving. So Fidelity Charitable is one of the key targets because they're the biggest donor-advised fund. They give over $11 billion out through their donor-advised fund each year. And so they're trying to limit the charitable choice of people who hold these kinds of accounts, and these accounts are growing by leaps and bounds. And so Fidelity Charitable is the first one that seems to be caving to these demands, but all these big national DAFs are subject to these same demands. Amalgamated Foundation, Southern Poverty Law Center, and others, like I said before, Unmasking Fidelity, are all running pressure campaigns to convince these organizations to deny gifts to organizations they don't agree with. And that's wrong, and these DAFs shouldn't listen to these outside activists. They should have no say in where people give their charitable dollars.
And what has ADF done in terms of the actions that it has taken?
Well, we've just been working with our donors who keep calling us and saying, hey, I'm being blocked or I'm being told I can't give anonymously to you by Fidelity Charitable or other DAFs that have done this as well. And so we're just working with our donors, try to help them navigate these issues and find a way to be able to give to us freely.
I mean, over the years, has this issue become worse or has it become slightly better?
Oh, no, it's gotten worse. It's definitely gotten worse. We had a few instances of this back in 2019 and 2020, but now, like I said, we're up to 15 donors and 12 different states have called us and told us they've run into this problem with Fidelity Charitable. And you got to understand, that's just the people who have called us. There's a lot of people. Fidelity Charitable is the biggest donor-advised fund provider in the country. So for the 15 people that called us, there's probably hundreds who have run into the same problem and just not reached out.
So you're saying it has gotten worse, but has the pushback also followed suit?
Yeah, well, I think that what you're seeing here from Attorney General Moody is really helpful pushback, creating a counterweight to what seems like a one-sided conversation with these donor-advised funds coming at them from activists who want them to bar gifts to organizations they disagree with. And we have run our own campaigns to try to educate people around these issues and help the donor-advised funds understand that the right thing to do and how you honor donor freedom is give those donors the freedom to give to the charities they want to give to without any kind of political or religious litmus test on their giving options.
I mean, ultimately, what's the end game here? Are they trying to silence some voices? What is it?
Well, the strategy is to limit the ability of organizations that groups like Southern Poverty Law Center disagrees with, limit their ability to get funding. They have come out and said emphatically that they exist to destroy the organizations that they put on their hate group list. Ridiculously, they have my organization, Alliance Defending Freedom, on there. We've won 14 Supreme Court cases since 2011. We're one of the most respected and successful Supreme Court advocates in the country on First Amendment issues. They just disagree with us on key policy issues, and so they put us on their hate group list. And so, what's going on is a concerted effort to try to harm and shut down and silence organizations that SPLC and other left-wing activists disagree with. And we just shouldn't tolerate it. As the American people, we should say, look, ideas should be able to be expressed, advocated for through legal means, through courts and legislatures and the public square, and let the best ideas win.
I mean, are we only seeing this from left-leaning financial institutions? I mean, I guess most financial institutions, the big ones, are left-leaning, but the right-leaning ones, if there are any, are we seeing that on that side?
I haven't seen any reports of it, so I'm only seeing it from institutions that are being, I wouldn't even call them left-leaning, they're just being influenced by external activists who are trying to co-opt their programs for their own cancellation purposes. And the institutions would be wise to stop listening to these activists and make their own choices about the kind of policies they want to have in effect to serve their donors.
If this issue isn't resolved, what do you think will this lead to ultimately?
Well, I think it'll lead to a mass exodus of donors who lean conservative from a lot of these large donor advised fund institutions. There are other donor advised funds out there who make it very clear that they respect donor choice and they're not going to interfere with where people want to send their money. And I would expect those institutions to ultimately gain a lot of new clients over the next 3 to 5 years if Fidelity Charitable and others keep up this kind of practice.
Okay, just one final question. What can regular folks do?
Well, a lot of regular folks have donor advised fund accounts. This is really a funding mechanism that makes charitable giving a lot more accessible to people who are just middle America folks who want to be able to grow their money and give more to charities. And so I would say open a donor advised fund account. If you want to open one at Fidelity, do so and make inquiries right at the beginning. Can I give to these organizations that I believe in? And make sure they go on record saying that either you can or you can't. And if you can't, either fight it or go someplace else where they're going to respect your freedom.
All right, thanks for your time today, Jeremy. Pleasure.
Thank you.